Hey guys, welcome back to the trade breakdown. This time we gotta do two of them instead of one, and both of them are on the go. And they happened last week, one on Wednesday, and the second one happened on Friday, right on the NFP. Okay, so first of all, this one is based off 15-minute time frame. Okay, so currently, as you can see, we are on the N50. Now, what happened? Why I decided to do that? Let me dive into the hard time frame first. We can see that on the hard time frame, we definitely broke the structure down there. We sold it down. That was not expected from what is going on, in the Middle East, but it is what it is. So technically, we covered the daily fair value gap, which I mentioned last week on the market breakdown. We covered that, and we had kind of weird retracement to the upside, as you can see on the chart. Now, here inside of that candle, we had a nice push down on the Wednesday morning. If I scale back to 15-minute time frame, I'm gonna show you literally why it's trade and how you can actually copy paste this to the next trade idea that obviously is going to get presented. It's going to get presented to you. Okay, so on 15-minute time frame, we have order block, or you can call it as well supply area. Okay, we have order block. As you can see, it rejected, if I'm not there. It rejected 2 times. Okay, but this happened during the London session, so it kind of built the liquidity, and also it built the liquidity to the downside. All of those lows are here to be taken out. So what I waited was basically for I'm going to speak in my time. So I waited for 2:30 p.m. UK time, which is 9:30 a.m. EST for New York Open. I waited that, but I waited this on the lower time frame, such as 5 minutes, right? So on 15 minutes, we discovered that we came to the supply area / order block. We rejected, we came back up, rejected again, and we build up a bunch of liquidity lows to the downside. So in this case, every low that you can see here is basically liquidity. It's basically a stop loss for people who were buying up. Now, don't get me wrong, everything is okay. Buying, going long in this situation is also great. You have multiple breakout structures to the upside, as you can see, but this happened through the Asian session. Well, I kind of sleep at that time, right? So in this case, we have all of these lows acting as liquidity, meaning that I want to target those lows, right? So I'm gonna mark them, all the lows. I want to target them like that, and I think the ultimate target was that one, the very low down there. Now, so how I decided to go in. If you can see, the first rejection happened at 10:15 a.m. UK time. Second one happened at 11:35, more or less 1 hour and something apart. And in the process, it kind of built the liquidity to the upside. Now we have to put this in perspective that we did reject the 15-minute order block or supply area, how do you want to call it. We were / bearish on the hard time frames such as H4 as well daily, but the last confirmation for me was honestly when price took liquidity to the upside on the opening and then collapsed to the downside, meaning that it took liquidity on the upside, triggering people to go into the buys again, right? And then collapse down, create a breakout structure, create fair value gap, order block, and this is where I actually got it. Okay, so I'm gonna place forward, so you're gonna see exactly what happened. Okay, so that candle, as you can see, we grabbed those highs that were created in the London session. So this means like I traded the session, right? Which means that I have to see the session liquidity being taken out. It doesn't happen all the time, but it's very, it is important, but it's not important. Someone will argue, that it has to take it every day, but it's not true, right? But if it happens, then okay, sure, it's cool. Now, we had a push higher. We had a push higher in the basically 12 a.m. is between London and New York session, just the overlap. we had a break instruction, we created the order block. The order block and as well the fair value, right? Let's see some more. Okay, we had this push to the downside. So where do you want to go in? Now let's mark the chart up. Okay, so we had a break instruction. We created fair value gap. We have the order block. We took out liquidity to the left side. We did all of it, right? I'm gonna mark that up. X. We did all of that. Okay. Chart forward, and we created another low as opposed to liquidity, right? Another thing. So this can definitely be a first target. You can say like, where you're gonna place a break even or something, We rejected this, another confirmation, rejected the order block to the T, very nice. Okay, move on, timing, it's 13:25 p.m. Okay, like that, okay, and we are at the 2 o'clock. Now you're gonna see. Okay, what happened? See the candle? This one. This is it. This is the candle. So what happened, to explain everything? Okay, we had liquidity building up to the upside as well to the downside, right? We took it out before overlapping to new accession. We pushed down, we created break of structure, we created order block, we created fair value gap, price came back in, rejected to the T. Okay, so this is first confluence. Rejected and create a small structure, pushed down again. See that? Change this. This is still a target, okay? This is still a target. Where is it? Liquidity. We have equal lows. Look at it. Beautiful. We have this low, but this is still the target. Don't get me wrong, okay? This is still the target. Okay, so my trade basically happened there. It wasn't a big entry, don't get me wrong, right? It was not a big entry. I placed it to the bottom of this. Okay, my trade happened there. Okay, stop loss, where? We can have it above the high, okay? So, I was targeting the lows. I'm gonna see now, price collapse it. First low obviously is going to be that one, to take out liquidity, to take out the lows. And everything on the left side, this one, and the ultimate target obviously was the low. I did not take it all the way down to the end. I took it out before, but as you can see, like this, eventually got hit. Okay, it was a bit of a slow price action afterwards, but at the end of the day, it is what it is. Trade was ultimately like 1.4 risk-reward ratio. But yeah, it was awesome. So the point here is that I traded the session. I traded new session unit open. I waited for liquidity being taken. I waited for higher time frame confirmation. I waited for break of structure. I waited for fair value gap, order block, and entry reconfirmation. First rejection. Okay, price going away, creating opportunity again to enter once more on more safer approach. Right? I could go in there, but it is what it is. So guys, this was the first part. This was the first trade taken on Wednesday, and the second trade was taken on Friday on NFP. A very technical one, despite having NFP. Right? I don't recommend you to do the same. The next time, I don't recommend you to doing that. But yeah. So let's find Friday. Today's Monday. Okay, Friday was here. Obviously, I have to go to hard time frame. Yep, this was the Friday then. Okay, getting that reply. Start new. Okay, decision making time. Okay, so again, it was based on 15 minutes, right? Well, we can always go higher. So obviously you have to understand that gold is safe haven, and what is going on. I'm bullish, fundamentally I'm bullish, not now, but bullish. Technically I'm not bullish yet, because currently we are in the range. As you can see, that we are stuck in the range, and once this range is broken, I'm waiting for this to get broken, and then reconstruction, test, boom, continuation. Okay, so I'm waiting for that, and once that happens, okay, then I'm going to be more bullish. But currently I'm in 50-50. So trade was taken based on 50-minute time frame again, like before. So we had a great collapse to the downside. We created a structure prior to NFP, prior to going into the Asian session. So this was London close, okay, London close, like New York. And in the Asian session, we escalated to the upside. We covered that fair value gap to the T. As you can see, it's covered, it's taken in the Asian, but it did create a demand level. So we have demand or order block. We had fair value gap, okay, and everything here, those lows that were created during the Asian session, London close, was taken out with this week, okay. I did expect that on the NFP or prior to that, the gold is going to take some liquidity, some more liquidity to the downside. It has to, technically it has to, because like it's price needs I always say this example: if you want to go from A to B, you need to, with the car, you need to fill the tank, so it's the same shit with the price. So you need fuel. So we created a break of structure. Cool. We created liquidity to the upside. Cool. Where is it? Liquidity. We have demand area. We have this order block, okay? My entry was on the top, like this, on the top of fair value gap. I wasn't placing it on the order block, like this. So stop loss obviously below, okay. Where is it? The play bottom, okay. So this is the London session, okay. London. I got in the London session, I think around 10, 11, I don't know for sure. I'm gonna see now where the price hits, okay. Got in at 9:30 in the London session. Obviously I was in the drawdown, not gonna lie, I was in the drawdown, okay. Definitely was in the drawdown. This low was taken out, okay. I did expect that to happen. Because it's too obvious to not happen, especially in the NFP, right? Because this is too set up to not take it, and something sometimes you have to have large stop loss to be protected, or you can just manage the risk, meaning that you can have a less stop loss, but I don't recommend it to change it in between the trade, because you are exposing yourself too much. But anyway, so we floated around the entry point for a while. As you can see, at 11:45 a.m. UK time, we took out this low, okay. So we did that. We took out this low X. We came back to the this is already NFP, sorry, but let me walk you through. Okay, we came back to the entry, we came back down before 30 minutes prior to NFP, and then on the NFP, because this low was already taken out here, we took out liquidity. We're building up for going higher. Now push on the NFP right there, boom, price returned back, obviously because it's new spike, but it continued in this direction of the movement. The target was the high of the structure. It was 5,205. This was my ultimate target. Obviously I didn't hold it to that, okay. I didn't do it because it was NFP, it was Friday, I was logging off, I was just taking the trade, and that's kind of it. I think eventually it hit the target. No, it didn't. It came very close. Okay. Anyway, So the point of this trade is obviously first we have a regular structure to the upside here. We create a fair value gap. We have demand area. We took liquidity and everything. We have a structure moving of the price to the downside, which is very cool, which very good honestly, because it shows that it's slowly coming down to your entry point without the momentum. Meaning that it's not much of a volume in, you know, everything is already built up down there. So it just came down to collect and move away. Okay. So this was the reason why I took this NFP trade, even though I said to many people that I'm done for the week Wednesday, but it is what it is, right? Guys, I hope it helps. Thank you for watching another trade breakdown. We're gonna see ourselves soon on another one. And yeah, thank you. Bye bye.